Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're talking retail stocks, and we have two people who know a lot about retail stocks. Chris Stott from Wilson Asset Management and Steve Johnson from Forager Funds. Welcome, gentlemen. First stock had a recent downgrade, got hit by the market, Myer. Steve?
Probably one of the more interesting ones in the space for mine, because I like with these retailers picking them up when they're struggling on margin and you've still got a lot of sales there. It tends to suggest you can turn them around. I would still say hold on it though. It's probably not cheap enough for me, and it's obviously got some problems, and I think the whole space is going to struggle as more and more international players come into Australia.
Chris, can Myer ever be cheap enough to buy?
It can be cheap enough, Matthew, but it's not at the moment to sell. We're really concerned about these international players coming in, particularly Sephora on the cosmetics side. So Myer make a lot of money out of cosmetics, and we're concerned that Sephora are entering Australia. So they've announced their result just recently, $35 to $50 million of extra cost this year, and we think they'll continue to invest over the next few years to stay in still, so I sell.
Okay, let's get to a more dynamic story at the moment. It's done very well, Harvey Norman.
Harvey Norman's a buy, Matthew, really driven by the improvement in the housing cycle. So New South Wales housing's on fire. 35% of their profit comes from New South Wales. They've got a large franking credit balance, a really strong balance sheet, and are well positioned, so strong buy.
Like Harvey Norman, Steve?
It was a much maligned stock a couple of years back, wasn't it? And I think you've got potential there for some balance sheet benefits for shareholders as well. A lot of franking credit sitting on the balance sheet. Jerry refuses to do anything with them, but I think the day will come where they do something there. I'd still say hold though. I've got some general concerns about the Australian economy, and they're a bit of a bellwether.
Okay, you're talking about the housing cycle, Chris. Furniture's a big beneficiary of that. Scali. Do you like it?
Scali as well would be a buy too, Matthew. Very strong management team, great balance sheet, a lot of asset backing there, net cash. So with housing expected to run for the next 1 to 2 years with interest rates staying low, we think Scali are incredibly well positioned, so buy.
Would you buy, hold or sell Scali, Steve?
I'd hold this one as well, and you're not going to get much luck out of me on the retail space because I'm concerned about the overall picture in Australia. But again, I agree the quality of this business is outstanding. The balance sheet's almost got nothing on it in the way of assets. They turn their inventory a lot every year, and it's a very, very profitable, nice business. I just think the price already incorporates a lot of that.
A bigger stock that's disappointed the market recently, JBH. Buy, hold or sell?
Hold as well, drifting towards sell for this one. Again, I think it's a wonderful business. I think the growth story has been amazing historically. I think it's going to be harder to come by in future, and I think that electronic space has probably got a few of its own unique threats, whereas Harvey Norman's got the more diversified housing portfolio there. You
ready to buy JB Hi-Fi, Chris?
No, look, sell there, Matthew. JB Hi-Fi, 607 in particular, went through the sweet spot with flat screen TV growth and laptops. People are now transitioning from laptops to tablets where they don't make much margin, and TVs are generally, plasma TVs are fully penetrated in the Australian households, so sell.
Let's go four-wheel driving, one of Australia's great stories, ARB.
Look, ARB is a hold, Matthew. We're a little bit concerned about its exposure to the mining cycle, as we know what's happening there, particularly here in Australia. Although we do look at their history of dividends, and particularly special dividends, and certainly based on their history, they may look to pay a special dividend over the next couple of years. So watching for that, but a hold at this point.
You're a holder of that as well, Steve?
Look, I'd probably drift towards buy. We don't actually own the stock, but I think it's a great little Australian company. Also concerned about the mining space, but it doesn't seem to be hitting them as badly as I thought it would, and their US business seems to be gaining a bit of traction, and a lower Aussie dollar would help a lot there. For me, it's always been the big upside for this stock is if they can get this to work in the US, it's potentially a very, very good market for them, and there are some signs of that starting to happen. So I think it's a great little high quality business as it is, and you've got a potential upside factor there in the US.
Well, there you go. There's some buys, there's some holds, and there's some sells. Thank you.